Most traders think danger shows up after a losing day, but the truth is, one of the biggest dangers in trading doesn't come from pain. It comes from pleasure. It comes from the quiet confidence that rises after a clean win, the subtle feeling of power after a green streak, the sense that you finally understand the market. It feels safe, it feels natural, it feels earned. But this feeling can blind you. It can blur the edges of risk. It can soften the rules you once held tightly. And without realizing it, you start trading from emotion, not from clarity. Overconfidence doesn't arrive loudly. It arrives gently wrapped in the warmth of a victory. Today we're going to slow down and look deeply into this invisible shift, how winning changes your state, how your state changes your perception, and how perception quietly becomes bias. If you've ever had a strong morning turn into a disastrous afternoon, if a green streak has ever caused you to loosen discipline, if confidence has ever turned into chaos, this session is for you. Welcome to Mind Over Markets. Let's begin. There is a moment in trading that feels harmless, even wonderful, yet it quietly becomes one of the most dangerous psychological states you can enter. It happens after a good day, after a clean win, after a sequence of green trades that feel effortless. It's the moment when confidence quietly slips into overconfidence, when clarity becomes certainty, when awareness becomes assumption, and when discipline begins to loosen because everything seems to be going your way. Most traders fear losing days, but the truth is, your biggest threat might be your winning days. Today we're going to explore the invisible psychology behind overconfidence, the hidden bias that silently forms after green days, the emotional high that distorts your perception, and the inner shift that leads traders to take risks they would never take in a neutral state. This is the side of trading no one talks about, not because it's rare, but because it's subtle. And subtle dangers are the hardest to notice. Let's begin. There's a moment after a win when your entire system changes, your posture opens, your breathing becomes lighter, your vision feels sharper. You feel aligned with the market almost as if you can sense its direction. Your mind whispers, "I'm seeing this clearly today. I've got this. I understand the flow." And in this moment, something powerful happens. Your brain begins to produce dopamine, the neurochemical of reward, excitement, and optimism. Dopamine has a purpose. It motivates, it energizes, it reinforces behavior. But in trading, dopamine becomes a bias, a distortion, a warm, confident glow that makes you feel safer than you actually are. Dopamine reduces the perceived risk of your next trade. It increases your appetite for action. It makes small dangers look insignificant. It makes poor setups look acceptable. It makes rules feel optional. This is how overconfidence begins. Not as arrogance, but as chemistry, as a physiological shift that changes the way you see the chart. You're no longer waiting for your setup. You're expecting it. You're no longer observing the market. You're predicting it. You're no longer following your process. You're expressing your momentum. Winning makes you feel powerful, but power without awareness is a trap. Traders often think overconfidence is a mindset problem, but the truth is deeper. Overconfidence is a state problem, a state created by emotion, reinforced by chemistry, and sustained by identity. Let's go deeper into the psychology. After a series of wins, your mind begins to inflate your identity. You feel capable. You feel skilled. You feel in control. Your internal dialogue shifts from caution to certainty. You begin believing, "I know what the market is doing. I can push a little more. I can size up. I can take just one more trade." And at first it works. The green momentum continues. The wins reinforce the identity. You feel untouchable, aligned, elevated. But the market doesn't reward identity, it reveals it. And overconfidence blinds you to this truth. There is a point, a tipping point, where confidence stops helping and starts hurting. A moment where you loosen your rules because you believe you don't need them. A moment where you stop seeing the market for what it is and start seeing it through the lens of your own emotional high. This is where risk perception collapses. This is where low-quality setups begin to look valid. This is where you start trading intuition instead of strategy. This is where you push size, not because it's wise, but because you feel like nothing can go wrong. This is the Green Day bias loop. A cycle that begins with a win is fueled by emotion and ends with a loss big enough to bring you crashing back down. It goes like this. You win, you feel good, you feel sharp. You feel aligned, your brain produces dopamine, your perception shifts, your guard drops, you take a few more trades, you loosen your rules, you take risks you wouldn't take in a neutral state. Then the first loss strikes, not a huge loss, just enough to trigger surprise, enough to disrupt your elevated state, enough to make your confidence crack. Suddenly, the emotional high collapses. Overconfidence becomes frustration. Frustration becomes disbelief. Disbelief becomes the urge to prove yourself again. And now you're in danger. Because overconfidence often leads directly into the arms of revenge trading. This is the emotional roller coaster created by Green Days. First the high, then the crash, then the scramble to get back what you think you should have kept. The surprising truth is this: traders don't only lose because they're emotional after losses. They lose because they're emotional after wins. Let's explore the root causes of this bias. The first root is identity inflation. When you win, you feel more capable than you actually are. Your brain attaches the result of the trade to your sense of self. But results are temporary. Identity should not be. The second root is illusion of skill. Sometimes you win because the market conditions favor your style, not because your skill increased. But when you win, your mind assumes it was always skill. Confidence rises on false data. The third root is euphoria blindness. Winning feels good. And when something feels good, your brain tries to prolong it. You begin chasing the feeling, not the setup. The fourth root is perceived loss immunity. After a big win or a green streak, your brain quietly creates the illusion that losses are unlikely or less dangerous. But danger doesn't disappear just because confidence grows. When these roots combine, your trading state becomes inflated, distorted, optimistic beyond reason. This is not real confidence. Real confidence is grounded, neutral, calm, patient. Overconfidence is emotional, energetic, hurried, blindly optimistic. To fix overconfidence, we must return to neutrality. Confidence should come from execution, not from emotion, from process, not outcome, from clarity, not euphoria. Let's talk about the solution. How do you repair your bias after Green Days? How do you restore neutrality before your wins become your downfall? The first step is state neutralization. You must bring your nervous system back to its baseline. After a win pause, 3 slow breaths, shoulders relaxed, spine straight, a moment of stillness, a moment of grounding. Because when your physiology returns to neutral, your mind follows. The second step is cognitive debiasing. Ask yourself, was this win skill or favorable conditions? What rules did I loosen today? Am I trading from clarity or from confidence? If I repeated this trade 50 times, would it still win? These questions break the illusion. They separate truth from emotion. They bring you back to reality. The third step is structural safety. Rules that protect you when you are less aware of your risk. No increasing size on Green Days. No more than 1 or 2 trades after a big winner. A mandatory break after hitting daily target. No continuation trades without a clear review. These structures act like guardrails when your state becomes compromised. There's a trader I once worked with who suffered greatly from overconfidence. Whenever he had a strong morning, the afternoon would destroy him. He believed he was seeing the market clearly. He believed his confidence was a sign of mastery, but he didn't realize that the confidence was emotional, not intellectual. After implementing a simple rule, a mandatory 5-minute break after every green streak, everything changed. Not because the system changed, because he changed. His state changed. His perception changed. His bias dissolved. He discovered that neutrality was the most profitable emotional state he could ever trade from. And that is the essence of this lesson. You must learn to return to neutral after every win. Because consistency does not come from winning big. It comes from staying balanced, staying grounded, staying aware. The pros do not get excited by wins. They do not get high on green days. They remain calm, steady, unmoved by the emotional waves that control most traders. The goal is not to feel incredible after wins. The goal is to feel neutral. Neutrality is clarity. Neutrality is control. Neutrality is strength. Neutrality is what allows you to execute with precision regardless of outcome. Overconfidence ends when neutrality begins. Remember, a green day is not a license to loosen your rules. A green day is a test of your ability to remain aligned with your process instead of being carried away by your emotion. The market doesn't punish winning. It punishes the behavior that follows winning. It punishes imbalance. It punishes carelessness. It punishes emotional trading disguised as confidence. Fix your bias before the market fixes it for you. Winning does not make you invincible. It makes you vulnerable if you let the feeling take control. Return to neutral. Return to presence. Return to awareness. This is where real consistency is born. This is where the next level of your trading identity begins. Not in the highs, not in the excitement, but in the calm, grounded space between your ego and your awareness. This is where you truly grow. This is where you truly see. This is where you truly trade. If there's one message to take with you today, it is this: a green day should stabilize you, not elevate you. Wins are not a signal to push harder. They are a signal to become more aware, more neutral, more intentional. Most traders lose, not because they lack skill, but because they lose themselves in the emotional high of winning. Overconfidence is not strength. It is a distortion. It blinds you to risk, to subtle warning signs, to the boundaries you need to stay consistent. But when you return to neutrality, when you breathe, when you reset your state, when you honor your rules, even in moments of excitement, you become unshakable. The pros don't feel invincible after wins. They feel calm, clear, centered, because they know the real battle isn't against the market. It's against the bias that rises inside them. Thank you for sharing this time of reflection and growth. If today's message resonated, stay connected with Mind Over Markets for more deep sessions on state psychology and identity. Until next time, trade with clarity, protect your neutrality, and let your awareness, not your emotions, lead the way. We'll speak again soon.